Hello and welcome to Successful Tradings, and today we are going to illustrate call option example using FlowAlgo tool. By the end of this video, you are going to learn one, how to use the historical flow feature of FlowAlgo. Second, how to spot sneaky option flow entry by smart money, and finally, how to benefit from this call option example. So without any further ado, let us go ahead and start. So here we are inside of FlowAlgo. So as of now, since this recording is taking place over the weekend, there's no data. If I'm to start with the snapshots as we showed you last time, so we are going to go here to the historical flow to share with you how to use this feature through a very good example that just happened to occur yesterday. So in here, you can come and just type. I'm going to type in the stock of interest that I want to illustrate, and I'm going to leave the dates open from and the end dates. The maximum number in terms of minimum order, I'm leaving everything blank, meaning it's giving me everything. My display here defaults, I usually put it to 30, but I don't know why. You can put it up to the maximum of 500 records. So just that, it just means it will go back in history and show you as many option flow from Qualcomm as possible. So just as an indication, if I put it to 500, let's see how far back it goes. This is a good way actually for you to see how often there is flow for a specific stock. So 500 record take us back for Qualcomm all the way to early October of 2018. So that's pretty good. So you have a full year of trade here that you can study on Qualcomm. I'm going to do a future video on here and actually how you can leverage this historical knowledge actually to set up trade or to learn about what type of trades to be looking, what type of option flow to be looking for next time that you happen to see one on your specific stock of interest. That's something to come up with. So let's come back here to Qualcomm. What I want to show you is the usage of this feature, right? So we select our stock on there and we go back in history. We get some the flow that have come in the past. But this specific one, I want us to get some our hand on that's going to serve us for this study is what happened on the 16th. So there are two series of trade. They are time apart. My hints as of now is that they are maybe not related. They could be, but actually there's just one of them that's really we're going to use as in our example. Both of them, they happen to lead to the same result. Both of them are calls. I want you to look at the time stamp on this flow. The flow comes in 12 minutes. So this is a Thursday, 12 minutes before the close for an expiration the very next day, January 17. The strike doesn't give us any major hints of what's going on really, because at the time when they took the trade, the stock is trading at 91.67, and so it's out of the money. This strike is out of the money. That's a good indication. So meaning that they expected the stock to gain $1 on Friday. $1 here maybe is 1%. So on a Friday, stock gaining $1, 1%. Yeah, that could give them some money, but hey, they decided to wait all the way to this time. Why wait until 12 minutes in and decide to make it? The volume by itself, it's another indication of the sneakiness of this. The open interest was 7,080 contract. The volume for this trade by itself, it's over a third of the total volume on that day. So this is something that you can see live. So in 12 minutes time, you have the opportunity to mimic this trade. So they took this trade, 12 minutes left, they're buying 1,143 contract at 24 cents. So for that trader, 27,000 that they are willing to throw away, because again, there's only 24 hours left in this trade. So if you were able to spot this, I'm going now to show you how to what happened to the trade and how much they benefited from this. Does the trade work for them? So, in order for us to do that, we are going to go side by side. Here we go. On the left hand side, we have the trading view chart tool. This is QCOM. This is the close on the 16 on this candle here. Every one of my candle here is a 15-minute candle, and this is the first candle on Friday. So on the day of the expiration, what a surprise, the stock jumped literally $1. So the close here is 91.75 and the open is 93, $1.25. So by the first candle, since those are 92.5 calls, they are already in the money. So they were bought for 24 cents on the right hand side. As you know by now, I love to bring in the chart of the option itself. So this is this is what I'm doing here. It's actually that since this recording is taking place on a Saturday, the expiration on the 17th no longer shows. So sorry about that. But nevertheless, I will tell you what happened on that. So I'm using the 24th, which is next week, and the 95 call, way out of the money, even, right? So on the 16th at close, it was trading for 32 cents. This first candle opened here on a Friday, so you went from 32 cents and it's closing as high as 79 cents. So you have made already 100% in less than 24 hours, in 12 hours or so between the time the market closed and the open on Friday, just on that candle. So these are 5 minutes. So if we put it on a 15 minutes, just to mimic the chart of the stock on the left hand side. So this is it. So here, after this one, it went as high as 98. Again, the close here is 32. 32 to 98, I love doing this. So 98, yeah, that could work. So just easily here, 98 cents is the price minus 32 divided by 32. Okay, folks, this trader and yourself, if you were to take the trade, just on this candle, at the close of this candle, you would have made 200% on options that will be expiring next week. We call this no sweat type of deal. So a day after you took this trade, at the end, in the last 15 minutes of the session, you are making 200%. If you were to say, hey, I like 100%, or take partial profit as we recommend and wait it for other contracts, look what happened. Now, all of a sudden, within an hour, less than an hour on the trading session on Friday, is trading as high as $1.92. $1.92, how much is that in terms of profit in relation to 32 cents? Divided by 0.32. You ready? 500%. So this is how you benefit from following the smart money. So this is for expiration again. So we are clear, January 24th, that's next Friday. The options that were expiring on this very day, on January 17, the 95 calls, I can tell you because I wrote them down somewhere. Sorry, I didn't record that before the got removed. The 95 calls for Friday, expiring Friday, at one point they were paying 2,270%. Yes, you're hearing that. So meaning 22 times pretty much which that you will have bought them for. And the 96 call, they follow suits obviously for that, because the stock actually went to $96 eventually, very late into the session. Look at it here. Qualcomm is trading at 96.14. It closed at 95.88, but you're hitting 96 the first time here at 1 p.m. Eastern. And those, they paid over 1,600%, meaning you multiply your initial risk by 16 times. This is it. This is what I wanted to share with you guys today in this example of how to follow the smart money into call options examples. So let me ask you something. Will you think that this is random, which that I just showed you on Qualcomm? Will you want to know how often this type of move takes place on expiration Friday? So in the comment section, I want you to leave your stock of interest. I'm going to go do the research for your specific stock and share it. How many times actually in a year? I can go as far back as I can to give you the answer to that. If not, I will be generating a video with the stock on my watch list one by one to showcase you the opportunities that exist in stocks such as Qualcomm and how each one of them they perform in general throughout the course of the year. So let's say 2016, 2017, 2018, 2019, out of the maybe the 52 Friday that exists, what's the percentage of time where an explosive move of this type is to take place? So thank you for watching. Please subscribe, like, comment, and we will make sure to continue to cater this channel to your need. Thank you, everybody. Bye-bye. Hello, and welcome to